number two actually has already been guessed over there. So we'll put the sheets up, but essentially what happens when there was a change in, I don't know if you remember old media and new media. Everyone in old media, in all the newspapers, was saying, you know, this internet thing's a fad. But the thing that really, the watershed came when the revenues from online finally exceeded offline. And then all the guys in old media went, all right, hands, okay, you win. Okay, then what if, so this is another scenario, it hasn't happened. What happens if the value of the virtuals exceeds the dollar? So we reach a point where the virtual becomes a reserve currency. And so this is quite an interesting scenario. Potentially, you know, it's a voluntary thing. So some small countries might just say, you know what, to hell with it, we'll adopt that as our practical virtual currency because this is now large enough. And the reason I give the media example is don't think it won't happen because you know, there were newspaper proprietors standing on the deck of their ship as it was sinking, saying this internet thing's a fad, going bust, saying this is impossible. Okay, so this is maybe a realistic scenario, perhaps not in the near future, but why don't we explore what would happen if this really happened? And clearly countries would operate independently and so on. There was an interesting comment about banks issuing their own currency, of course, which is exactly what they used to do. So it's a kind of full circle. And actually it would be quite beneficial interestingly, if banks did issue their own currencies, for reasons we can't explain now, but actually it would be quite an interesting point. So 10 minutes, we'll photograph, move on to James's presentation. So cameras on, everyone. Paul?
Yeah, I suspect that I'll do a quick run through and my colleagues will join in because it's been a very interesting discussion and I'm only going to summarize it and then they can like fill in the real value to it. So the question was, what does life in this scenario look like? Well, we had a discussion about if that scenario was to come about, then there's a balance of trust between fiat and the virtual currency. So if the balance of trust is there, well, there will be no change in effect. You know, if that balance of trust changes in a steady way, then life will go on. You know, if there is a adoption of a virtual currency that overtakes in value the adoption of the US dollar, then it's because people wanted and trusted that to happen. The next question was, what is the impact of existing banking chain? Well, we've actually put almost nothing, apart from the phase of disruption. In other words, there's going to be a disruption if that's going to happen, but banks will move, new banks, new financial institutions will grow and address the problem if that is a problem. The same useful services that banks provide will still be provided, whether they get provided by the existing banks or new players in the market. Again, almost nothing. Change will happen, but change has been happening in the financial services market for a long time. The other point on that was the decreased value in the function of banking. If disintermediation happens and banks are not required in some of those transactions, then the overall value of the current banks will decrease. But then no doubt they will find other ways of providing value in that new world, which has been painted by the scenario. There's also going to be, speaking as somebody that's worked in the fintech area for some time and had to deal with payment systems, a simplification of the infrastructure, at least in a technical level, that's certainly the case. In that the blockchain and the virtual currencies, or at least virtual currencies which will come with a crypto blockchain, should be a much simpler environment to work in than the numerous payment systems that we currently use. The third one was, how disruptive is the scenario and what opportunities for banking does it present? This one wasn't discussed so much because I just put it down. It said anything is better than maintaining the status quo. So I'll move on from that. Then who are potentially the main beneficiaries of this scenario? Well, if it's being used, then whoever's using it are the beneficiaries of it, which might sound a bit glib, but if this virtual currency has gained enough acceptance for to exceed the use of the American dollar, then all the different people who are using it for all the different reasons they're using it are the beneficiaries. Whether you want to burrow down into who those might be, then you'll need a crystal ball better than mine. Yes, so on to the fifth part. Nobody's butted in yet, which is quite amazing to me. How can these opportunities be best harnessed, and what new products and services are created? Well, we were looking at what new products and services would be created, and we said, well, actually, that previous scenario sort of really addressed that question, we thought, quite well. People were talking about the underbanked and, everything that was discussed in the last one. One of the parts of the discussion that was quite interesting was that in a virtual currency, it's obviously virtual across borders. And all these discussions talk about the countries and how the countries, for instance, can tax. But when a virtual currency is in operation, then across a border, the border is very difficult to draw within the virtual world. And that's partly the problem with taxation, for instance, in existing internet transactions, where we got Amazon saying that the transactions from Britain actually occurred at the start of the transaction. They deemed the start of the transaction in Ireland, so they pay tax in Ireland. So how that's going to work is difficult, but the opportunities perhaps is that in country states which are in some sort of disruption and can see early adoption of a virtual currency, you could actually get cross-border currency union, a de facto cross-border currency union, by all using the same currency. And they don't even have to butt on each other. They could actually be a single currency. Could, in the same way as dollars used across the world for oil trading, Bitcoin can provide opportunities for people to not have or lower their transaction costs with a digital currency, at least until it gets converted into fiat. And then, what other implications does this scenario hold, and for whom? Well, it creates a completely new set of channels that may be outside the banks. I put may, because I think the banks have actually got an opportunity to, and are in a very good position to take advantage of these new channels. Bill Gates was quoted, banking is necessary, banks are not. Well, banking, I think, is necessary. There's great, banks have been around ever since money's been around in most forms. And they provide some very basic required services. But it's not necessarily the banks, for instance, that's going to be able to provide the KYC or the transactions. Certainly the mobile operators are looking at how they're positioned with KYC and obviously the providing the infrastructure and the transaction channels. And and then this problem about the country states gathering tax. I've already touched on the Amazon example, and there are many others. But the country states are looking for benefits within their borders, and yet these transactions through the internet, but also through virtual currencies, are cross-border. And how do you actually draw that line is a technical and political problem as much as anything else. Does that summarize it? Does anybody else want to?
It's a very good summary and some very good themes. The cross-border thing is very, very serious. That's what the regulators are up in arms about. Well, that's actually what the governments are up in arms about. But I love your quote from Bill Gates. I wish I'd known that before a conversation I had yesterday about, somebody asked me if banks would exist. I said, we have to have a banking system. Is it Mike? Well done, Mike. We have to have a bank. Close friend, yes. Is he the governor of the Bank of England or something? But brilliant. Thank you very much, guys. That was a very good one. Thank you. Right, so next. So who's brave enough to talk us through this?
Okay, so it's my writing, so I guess I ought to try and read it. We kind of went a little bit off-piste in terms of the questions, so I'll just take you through our kind of stream of conscious thought. Obviously, if we switch to a digital reserve currency, the US Fed is going to lose its ability to kind of influence other nation states by the way its monetary policy. So that's the first point that we kind of touched on. Secondly, if you're a business that needs to hedge, say you're an airline company and you need to hedge on the price of oil, you then have to start hedging in this new digital currency if that commodity is traded in the digital currency. So there might be some disruption there in terms of how you do that. We were thinking about small economies that suffer from instability in their currency due to companies trading it, speculating in their currency, and how that can destabilize the value of their currency and make foreign trade really, really difficult. And we thought of Iceland as an example of this. And we thought that they might be interested in adopting this digital reserve currency as their own to get that stability, as opposed to adopting, say, the currency of another nation state and then becoming beholden to that nation state's central bank. So that was an idea that was floated. If this digital currency was deflationary in the same way that Bitcoin is, we were thinking that this might disrupt the investments and the pensions market. You wouldn't necessarily have to go out and seek some company to provide you an investment service to store your money so that it was worth more when you came to retire or at the end of the year. You could just put it in your digital mattress and come back to it, and if you'd have that natural increase in value due to deflationary. So maybe there'd be some disruption there. The other point that we made was that there may be a negative impact on countries like, in a situation like Greece, where they owe a lot of money. Again, deflationary means that over time, if you owe some money today, over time you'll owe more value, unless you can obviously pay that down quickly. So kind of Germany wins, Greece loses, which is similar to what's happening anyway. We thought there might be some resistance from the US to the kind of adoption of this new digital currency as a reserve. We're not really sure what that would mean. Maybe they'd send their tanks and planes over, I don't know. So trade. So trade might adopt or might be a driver to governments to permit the use of this currency. So if how would this currency become established? Well, maybe if certain commodities or certain products are traded in the digital currency, the companies within a country might put pressure on that government to permit trade within the digital currency. So that might be some way that we'd actually end up getting to this scenario. There was also some speculation that this type of digital currency might be more aligned with trading in digital goods and digital services as opposed to physical goods and services. And then if you are a company that's exposed to risk in terms of currency fluctuation values, then again, this digital currency might be very attractive to your company, and you might use it for that. And then I wrote world government ? So maybe this digital reserve currency might lead to some sort of world government committee forming to kind of deal with that notion of, how do we distribute tax, and how do we kind of form a consensus of how we'll interoperate between countries. Maybe government's the wrong word. Committee might be a better word for that. And that was it.
Thank you very much. Team 3, who's going to pick up on team 3?
Most of the points are already discussed, but I'll go through that anyway. So the trading of, for example, key commodities will be in Bitcoins, maybe in the future. So adopting Bitcoins for any sort of trading would be an obvious choice at that time. And then again, it's the point discussed again and again. So the influence of US dollar on, for example, on oil price or petrol, petrol would definitely decline, and that will have an impact on raising debt. And all sort of political influence around that area would be an issue. So this is another, I tried to coin this word, probably digital oligos. So people who are kind of an early adapters of Bitcoin, who has got a lot of money and who knows there's a potential in Bitcoin, probably they'll become the next rich people probably. So the next point is, again, the salary and everything will be in terms of Bitcoin, so which will throw up new problems like how to control, for example, how to tax if someone who is getting paid, for example, in offshore in terms of bitcoins. So that gets harder. So probably new sort of regulation things will come into place to try to regulate this kind of anti-money laundering thing. So the other thing is we thought about is anti-West countries. For example, it'll be very difficult for US to impose sanctions, for example, Iran and countries like that. So they could easily trade in bitcoins and use this kind of digital currencies in all sort of possible things. So that's one interesting area. So then there's an impact on countries like Greece and the countries who are in trouble probably. They could come out of, for example, European Union, and they can have their own kind of digital currency union or something, and they could adapt this currency as an obvious choice. So who are going to benefit from Bitcoin? That's the question, I think. So again, people who are tech savvy, who are geeky, and who knows there is a potential market in this, they could benefit from Bitcoins. So state-sponsored attack on currencies.
Basically saying if the US got in trouble. Sorry. So if the US got in trouble, then perhaps, or some other country, they could actually use their cyber warfare to take the system down. That was the idea. And the second point was, of course, debt is priced on US dollars. So it's a comparison of interest rate differentials. So obviously, if it's not the main currency, then you need a new pricing strategy.
Okay. And point number 5, how can this opportunity be harnessed? So, I mean, in future, if everything is going to be digital currency, and if it's that's going to be a mainstream currency, then some sort of central bank equivalent or a regulatory body may be in place to manage the demand and supply. Because as you know, there's only so much can be mined, for example, in case of Bitcoin. So how can they meet the demand-supply gap? So that's an interesting thing we were discussing about. Or probably they could, if there's a limit on, for example, a particular currency, probably they could switch over to a new digital currency, and that again creates things like some countries will adopt kind of digital coin which are high valued, and some other countries will have come up or join a new union which is called digital currency of kind of low value, for example USD, or for example other currencies like, for example, rupees maybe.
That's okay. Thank you very much. Thanks. Last group over here.
All right, so I think a lot of these things have been touched on already, but we thought it's quite significant that we'd be moving away from using a debt-based currency to something like Bitcoin or another virtual currency. I've written Bitcoin a lot here, but we're not specifically saying it will be Bitcoin. We think that might have an impact on the US's superpower status, but it's not going to be an overnight shift. That'll be a slow change to move towards that. The volatility in the virtual currency we're using will decrease as it's used on a much wider scale. And then in terms of what governments hold, instead of holding debt, another country's debt, they might actually start holding this currency itself rather than holding T-bonds and so on. How that affects the banking value chain, it will probably reduce transactional banking costs as moving money between countries becomes a lot cheaper, especially if we can use just one currency for all of it, and increases the transparency of money moving between places. The other part of increasing transparency is it increases transparency within banks. So some of the fines that have hit some of the big banks recently have been due to some obfuscation of where money is moving, and this makes it harder. So new opportunities for banking. Well, we see the virtual currency becoming a sort of currency of currencies, something in between all of the other fiat currencies that still will exist in different countries. So there's an opportunity to run that market, to broker that market, and so on. And then banks might also start issuing debt denominated in Bitcoin or whatever it is. So that then becomes a lot about how much people trust that bank to be able to give them the reserve currency. Who are the main beneficiaries? Well, embargoed countries, that's been touched on already. Net exporters, because we think that now that it's no longer the most powerful country is the one with the most trusted debt-based currency, it's who's actually providing value to the world. And then suppliers as well, because if you have your whole supply chain denominated in this reserve currency, and it's a blockchain-based currency, it's much easier to see where the value is going in that chain. So if I buy a bag of rice at the supermarket, and I can see that some of it goes to the supermarket, some of it goes to the guy who delivered it, some of it goes to all the way back up the chain to the person who grew it. I mean, that makes the supply chain more clear and more fair. So I've kind of touched into that already, but that's a potential new product is when I buy that bag of rice, the money automatically goes directly to the people who were involved in getting me that bag of rice. I didn't suggest this one, but a trusted virtual safe for all assets, if everything is sort of goes towards being blockchain based and so on. And global electronic markets in all assets, because you can easily move between things that are listed in this reserve currency, which is a blockchain-based currency, and then blockchain-based other assets. So then a few more ideas at the end. Governments won't be able to sort of have that race to the bottom in the way they currently do in terms of quantitative easing, because there's this sort of benchmark which they all have to compete against. That'll sort of end up with smaller governments, commodities being priced in Bitcoin, that's been mentioned. The cost, the barrier to entry in terms of setting up a new country might be lower, because if you're a group of people in an area that adds value to the world, well, you can just set up your own currency or just use this reserve currency. It's a bit blue sky. But one last thing was that countries or nations are no longer defined by the lines that are drawn around them. It's based on their sort of currency of common use. And so in areas where, like in Iraq, where it becomes much easier for them to say, well, we're all doing one thing together. You can split the country up more easily based on how people are actually trading, and then they can all independently transact into this global reserve currency, which has fewer restrictions on it.
Okay, guys, brilliant. We're going to move on. If you want to regroup, let's get the